Good morning students. Now we are going to see about the income from house property. Income from house property under the section 22 Income Tax Act 1961. What is the income from house property? We are going to see the definition of the income. Any income received from the house property, house, buildings, bungalows, godowns is to be computed and assessed under the section of income from house property. How we calculate the income from house property? Annual value of that property and minus deduction under the section 24. Type of the income from house property. First, it is the section 23. We have to classify it into two types. One is self-occupied house, another one is let-out house. Self-occupied house is nothing but it is the assessee or resident is occupied himself, that is called as a self-occupied house. It is assessee going to let out for others, that is called as a let-out house. These income come under the section of income from house property. If the assessee is going to be used for the any business or profession or used for the any stock in trade, that income we calculated as a profit and gains for business or professions. Next we are going to see about the different value of the property. Now we have the four value of the property: municipal value, fair rental value, standard rent and actual rent. What is the municipal value? The value of property is made by the local municipality, that is called as a municipality value. What is the fair rental value? It is nothing but the value of the property. It is the value of the property in same location. It is called as a fair rental value. What is the standard rent? It is the standard rent is calculated by the Rent Control Act. Next is actual rent. Actual rent is received from the tenant is called as a actual rent. Next we are going to see about the calculated the house rental value, that is a house property. First we are going to see about the net value of the asset. How we calculate the net value of the asset? The income, if you are going to receive any income from the let out, that we call it as the income from house property. It is the gross value of the income minus any municipality calculating any tax that is deducted from the gross annual value. We calculated the annual value of that asset. That is the one type of calculating the income from house property. Another one is not only we going to deduct the municipality tax, we have to deduct the standard deduction under the section of 24. We deducting municipality tax, we can deduct from the standard deduction under the section of 24. What are the standard deduction under the section 24 means? It is the first one is we can be deduct the 30% of adjusted annual value from the property. Another one is any interest borrowed for the capital or any interest we paid as a loan for any purchasing of the new asset. This is the two type of deduction we can be deduct the annual value of the property. We are going to see the income from house property. How we calculating the income from house property? Gross value of the asset minus municipal tax. We can get the adjusted annual value. If we get the adjusted value, we can be deduct the standard deduction under the section of 24, that the adjusted value of the asset into 30%. Whatever amount we get, we can be deducted from the annual value of the asset. Another deduction, standard deduction, is interest on borrowing of the capital. It is nothing but any purchasing of the new asset, we can be we paying the any interest for that new property, we can be deduct from this property. So this is the two deductions we can be deduct from the annual value of the property. We can be calculated income from house property. Thank you.